Disclaimer: welcome. The information provided in this audio series is for educational and informational purposes only, and is not intended as, and should not be understood or construed as financial, investment, tax, or legal advice. The content is not a substitute for professional advice from a qualified expert. Always seek the advice of a qualified professional with any questions you may have regarding a financial decision. The creators of this content are not liable for any actions taken based on the information provided. Hello, and welcome to Unlocking Your Future, a beginner's guide to starting a career in the U.S. finance industry. I'm your guide, and over the next several chapters, we'll navigate the exciting and often complex world of American finance. This series is designed for everyone, from college students mapping out their future to career changers looking for a dynamic new field. Our goal is to demystify the industry, break down the various career paths, and provide you with a clear, actionable roadmap to get started. So let's begin with the foundational question. What exactly is the finance industry, and why is it such a powerful force in our economy? At its core, the finance industry is the system that allows for the flow of money. Think of it as the circulatory system of the economy. It's a vast network of institutions, markets, and professionals that manage money, credit, investments, and assets. This industry helps individuals save for retirement, enables businesses to raise capital for expansion, and allows governments to fund public projects. It's where capital is allocated, risks are managed, and wealth is created. Without a robust financial sector, the economy as we know it simply couldn't function. The U.S. finance industry is arguably the most influential in the world. It's home to Wall Street, the New York Stock Exchange, and NASDAQ, names that are synonymous with global finance. But the industry is much more than just stock trading. It encompasses a wide array of sectors, each with its own unique functions and opportunities. Let's break down some of the main pillars. First, we have commercial banking. This is the part of finance most people interact with daily. Think of institutions like Chase, Bank of America, or your local credit union. They provide essential services like checking and savings accounts, grant loans for homes and cars, and issue credit cards. For businesses, they offer loans to fund operations and growth. A career in commercial banking might involve being a loan officer, a bank teller, a branch manager, or working in credit analysis. It's a stable and vital part of the financial ecosystem, focused on serving the everyday financial needs of individuals and businesses. Next up is investment banking. This is the sector often glamorized in movies. Investment banks act as intermediaries. They help corporations raise money by issuing and selling securities, like stocks and bonds, in what's known as the primary market. They also advise companies on mergers and acquisitions, when one company buys another, and help them with complex financial strategies. Major players here include Goldman Sachs, Morgan Stanley, and JP Morgan. Careers in investment banking are known for being demanding, with long hours, but also for being incredibly lucrative and intellectually stimulating. Roles include analysts, who do much of the financial modeling and valuation, and associates, who manage the deal process. Then there's investment management, also known as asset management. This sector is all about managing money for others. Investment managers work with a wide range of clients, from individuals with retirement accounts to large institutions like pension funds and university endowments. Their job is to grow their clients' assets by investing in a diversified portfolio of stocks, bonds, real estate, and other assets. Firms like BlackRock, Vanguard, and Fidelity are giants in this space. If you're passionate about market research, analyzing trends, and making strategic investment decisions, a career as a portfolio manager, research analyst, or financial advisor could be a great fit. This field requires a deep understanding of markets and a steady hand to navigate volatility. Another key area is corporate finance. Instead of working for a financial institution, you work within a non-financial company. Think Google, Ford, or Procter & Gamble. The corporate finance department is responsible for managing the company's money. This includes tasks like budgeting and forecasting, managing cash flow, analyzing potential projects and investments, and deciding how to fund the company's operations, whether through debt, equity, or its own profits. A role in corporate finance, such as a financial analyst or a treasurer, gives you a direct hand in the strategic decisions that drive a business forward. It's a fantastic way to apply financial skills in a specific industry you're passionate about. Finally, let's touch upon insurance. While sometimes seen as separate, the insurance industry is a critical component of the financial world. It's all about managing risk. Individuals and businesses pay a premium to an insurance company, which in return agrees to pay for specific losses, whether it's from a car accident, a health issue, or a natural disaster. This provides financial security and peace of mind. The industry offers diverse roles, from actuaries who use statistics and mathematical models to assess risk and price policies, to underwriters who evaluate insurance applications, and claims adjusters who investigate and settle claims. These are just the major pillars. The finance world also includes private equity, venture capital, hedge funds, financial technology or fintech, and real estate finance, each a complex and fascinating world of its own. We'll touch on some of these more specialized areas in later chapters. For now, the key takeaway is that the finance industry is not a monolith. It's a diverse collection of interconnected sectors, each offering a different type of work, a different culture, and a different set of challenges and rewards. The stereotype of a finance professional as a fast-talking stockbroker is a very small part of a much larger picture. There are roles for people with all kinds of skills and personalities, from highly analytical number crunchers to relationship-driven salespeople and strategic big-picture thinkers. As you begin your journey, the most important first step is self-reflection. Ask yourself, what aspects of finance genuinely interest me? Am I fascinated by the fast-paced world of trading and deal-making? Or am I more drawn to helping individuals plan for their financial future? Do I enjoy deep, analytical research? Or am I better at building long-term client relationships? Understanding your own interests, strengths, and work style preferences will be crucial in helping you identify which corner of this vast industry is the right fit for you. In our next chapter, we will delve deeper into the specific skills, educational backgrounds, and certifications that are most valued across these different sectors. We'll explore what you can be doing right now, whether you're in high school, college, or considering a career change, to build a strong foundation for success. Thank you for listening to this introduction. The world of finance is complex, but it's also filled with incredible opportunities. Let's continue to explore it together. Hello and welcome back to Unlocking Your Future. In our first chapter, we explored the vast landscape of the U.S. finance industry, from commercial banking to investment management. Now that we have a map of the territory, it's time to talk about equipping yourself for the journey. In this chapter, we're going to focus on the essential toolkit every aspiring finance professional needs: the skills, the educational background, and the certifications that open doors. Think of this as building your foundation. A strong foundation won't just help you get your first job, it will support your entire career. Let's start with the skills. We can break these down into two categories: foundational skills and technical skills. Foundational skills are the universal traits that are crucial no matter which sector of finance you pursue. At the top of this list is a strong analytical and quantitative ability. Finance, at its heart, is a numbers game. You need to be comfortable with mathematics, statistics, and data analysis. This doesn't necessarily mean you need to be a math genius, but you must be able to interpret numerical data, identify trends, and use that information to make logical, reasoned judgments. Whether you're analyzing a company's financial statements, assessing the risk of a loan, or building a retirement portfolio, your ability to work with numbers is non-negotiable. Hand in hand with analytical ability is attention to detail. A misplaced decimal point or a misread line item on a balance sheet can have significant consequences. Financial models and reports are complex, and accuracy is paramount. Cultivating a meticulous and detail-oriented mindset is one of the most valuable things you can do. Next, let's talk about communication skills. This might surprise you. Many people think finance is just about sitting behind a screen, crunching numbers. But the reality is, finance is a people business. You need to be able to take complex financial information and explain it clearly and concisely to clients, colleagues, or management, many of whom may not have a financial background. Strong writing skills are needed for creating reports and presentations, and strong verbal skills are essential for client meetings and internal discussions. The most successful professionals are often the best communicators. Now let's shift to the technical skills. These are the more specific, software-based competencies that employers look for. First and foremost, Microsoft Excel. In the world of finance, Excel is king. It is used for everything from basic data organization to building incredibly complex financial models. Gaining an advanced level of proficiency in Excel is one of the most high-impact things you can do for your career prospects. This means going beyond basic formulas. You should aim to master functions like VLOOKUP and FLOOKUP, create pivot tables, and understand how to build financial models from scratch. There are countless online courses and resources available to help you become an Excel power user. Building on that, an understanding of financial modeling and valuation is critical, especially for careers in investment banking, corporate finance, and investment management. A financial model is essentially a tool, usually built in Excel, that forecasts a company's future financial performance. Valuation is the process of determining what a company or an asset is worth. Learning how to build a three-statement model, which connects the income statement, balance sheet, and cash flow statement, is a fundamental skill that will set you apart. Next, what about education? What should you study? The traditional path into finance is through a bachelor's degree in fields like finance, economics, accounting, or business administration. These programs provide the theoretical and practical knowledge that the industry is built upon. However, the industry is increasingly open to candidates from other backgrounds, especially in more quantitative roles. Students with degrees in mathematics, statistics, computer science, and engineering are highly sought after for their advanced analytical and problem-solving skills. So, if you're not a business major, don't be discouraged. The key is to demonstrate a genuine interest in finance and supplement your coursework with relevant internships and self-study. For those considering advanced degrees, a Master of Business Administration, or MBA, has long been a popular choice for accelerating a career in finance, often leading to higher-level associate roles. Other specialized master's degrees, such as a Master of Finance or a Master of Financial Engineering, offer a more focused and quantitative-heavy curriculum. Finally, let's briefly introduce the world of professional certifications. These are not typically required for entry-level jobs, but as you progress in your career, they can provide a significant advantage by demonstrating a high level of expertise and commitment. One of the most prestigious is the Chartered Financial Analyst (CFA) designation. The CFA program is a rigorous, three-level exam series that covers a broad range of topics in investment management, financial analysis, and ethics. It is globally recognized as the gold standard for the investment management industry. Another set of important credentials are the FINRA licenses, such as the Series 7 and Series 63. These are actual licenses, not just designations, and they are required for anyone who sells securities products. Your employer will typically sponsor you to take these exams after you've been hired for a relevant role. We've covered a lot of ground here, from the importance of communication to the necessity of Excel, and the prestige of the CFA charter. The key message is this: building a career in finance is an active process. It requires a commitment to continuous learning. Start by mastering the fundamentals. Sharpen your analytical mind, become an expert in Excel, and learn the language of finance through your coursework or self-study. This strong foundation will be the launching pad for your success. In our next chapter, we'll discuss how to get crucial hands-on experience through internships and the art of networking to build connections that can shape your career. Thank you for listening. Hello and welcome back. In our last chapter, we laid the foundation by discussing the essential skills and educational paths for a career in finance. But having the right tools is only half the battle. Now, we need to talk about how you actually start building. This chapter is dedicated to two of the most critical, action-oriented steps you can take: securing internships and building your professional network. These are the twin engines that will propel you from aspiring student to a candidate with real-world experience and connections. Let's start with internships. In the competitive finance industry, relevant work experience is not just a plus, it's often a prerequisite. An internship is your opportunity to test drive a career path. Apply the theoretical knowledge you've learned in the classroom to real-world business problems, and most importantly, show future employers that you are committed and capable. A well-known investment bank or asset management firm on your resume signals to recruiters that you have passed a competitive screening process and have been exposed to a professional environment. So, where do you find these opportunities? If you are a student, your first stop should be your university's Career Services Center. They have established relationships with companies, host career fairs, and manage online job portals specifically for students. They are an invaluable resource. Beyond campus, major financial firms have structured internship programs, typically for the summer, with application deadlines that are often in the fall of the year before. It's crucial to be aware of these timelines. Websites like LinkedIn, Indeed, and specialized finance job boards are also excellent places to search. Don't overlook smaller, local, or boutique firms. An internship at a smaller company can often provide more hands-on experience and direct exposure to senior employees than one at a massive corporation. Once you land an internship, the goal is to be more than just a temporary employee. It's an extended interview. Your mission is to absorb as much as you can. Arrive early, stay engaged, and approach every task, no matter how small, with a positive attitude and a commitment to excellence. Ask thoughtful questions, not just about how to do something, but why it's being done. This shows that you are thinking strategically. Seek out opportunities to help your team, even if it's outside of your official duties. Your initiative and work ethic will be noticed. An internship that ends with a full-time job offer is the ideal outcome, and your performance is the primary factor in making that happen. Now let's pivot to the second engine, networking. The word networking can sometimes sound intimidating or transactional, but at its heart, it's simply about building genuine, professional relationships. The old saying, "It's not what you know, it's who you know," is perhaps an overstatement, but the truth is that a strong network is an incredible asset. Many job openings are filled through referrals before they are ever posted publicly. A personal connection can get your resume a closer look and provide you with invaluable insights that you can't find online. How do you start building a network from scratch? Again, your university is a great starting point. Connect with professors, especially those with industry experience. They can offer advice and may have connections they are willing to share. Your university's alumni network is a goldmine. These are people who have been in your shoes and are often very willing to help a fellow graduate. Most universities have an alumni database you can access. A powerful tool for networking is the informational interview. This is not a job interview. It is a brief, 20 to 30-minute conversation you request with a professional in a field or company that interests you. The goal is simple: to ask for their advice and learn from their experience. You can reach out to alumni or other professionals on LinkedIn with a polite, concise message. In your message, introduce yourself, explain why you are interested in their work, and ask if they would be willing to spare a few minutes to share their insights. During the conversation, be prepared with thoughtful questions about their career path, their industry, and what advice they have for someone starting out. Remember, you are asking for information, not a job. At the end of the conversation, always thank them for their time, and ask if there is anyone else they would suggest you speak with. This is how you organically grow your network. LinkedIn is an indispensable tool in this process. Your LinkedIn profile should be professional and complete, with a clear photo and a summary that outlines your career interests. Use it to research people and companies, and to connect with the people you meet. When you send a connection request, always add a personalized note reminding them of how you met, or why you want to connect. The key to successful networking is to be genuine, respectful of people's time, and focused on learning. It's a long-term strategy. You are not just collecting contacts. You are building relationships that can provide guidance and support throughout your career. In summary, internships provide the proof of your abilities, while networking opens the doors to opportunity. They work together. The people you meet during your internship become your first professional contacts. The advice you get from networking can help you land that very internship. Start today by polishing your resume, exploring internship postings, and identifying a few professionals you could reach out to for an informational interview. In our next chapter, we will focus on how to create a resume and cover letter that are perfectly tailored for the finance industry, ensuring your first impression is a powerful one. Thank you for listening. Hello and welcome back to Unlocking Your Future. In our previous chapters, we've explored the finance industry, discussed the essential skills, and highlighted the importance of gaining experience through internships and networking. Now it's time to package all of that value into two critical documents: your resume and your cover letter. These documents are your personal marketing materials. They are often the very first impression a potential employer will have of you. In a competitive field like finance, a generic, poorly constructed resume can get you screened out in seconds. This chapter will guide you through the principles of creating a powerful, finance-focused resume and a compelling cover letter that command attention. Let's start with the resume. The number one rule for a finance resume, especially for entry-level and early career roles, is to keep it to one page. Recruiters and hiring managers are incredibly busy. They need to be able to assess your qualifications quickly. Your resume must be clean, well-organized, and easy to scan. Use a professional font, clear headings, and make effective use of white space. The content of your resume is where you truly differentiate yourself. Every bullet point should be crafted to demonstrate impact and results. A common and effective framework for this is the STAR method: situation, task, action, and result. For each experience, describe the situation you were in, the task you needed to accomplish, the specific action you took, and most importantly, the quantifiable result of that action. Quantification is key in finance. The industry runs on numbers, and your resume should reflect that. Don't just say you assisted with financial analysis. Instead, say something like, analyzed financial statements for 5 mid-cap technology companies to support a $50 million investment decision. Don't just say you helped manage a portfolio. A stronger version would be, co-managed a $250,000 student investment fund, implementing a value investing strategy that resulted in a 12% annual return, outperforming the S&P 500 by 2%. See the difference? Numbers demonstrate the scale and impact of your work. Let's walk through the standard sections. Start with your contact information at the top. Following that is your education section. This should be prominent, especially if you are a recent graduate. Include your university, degree, major, graduation date, and your GPA, particularly if it's a 3.5 or higher. You can also include relevant coursework to showcase your academic preparation. Next is your experience section. This is the heart of your resume. List your experiences in reverse chronological order. For each role, whether it was an internship, a part-time job, or a significant university project, use those action-oriented, quantified bullet points we just discussed. Use powerful action verbs like analyzed, developed, managed, quantified, and forecasted. Finally, you'll have a skills section. This should be broken down into subcategories. For example, technical skills, where you list software like Microsoft Excel, programming languages like Python or R, and any financial platforms like Bloomberg Terminal. Then have a section for language skills. This formatting makes it easy for a recruiter to quickly see your specific qualifications. Now let's turn to the cover letter. If the resume is the what, the cover letter is the why. It's your chance to tell a story and connect the dots for the hiring manager. It should never be a simple rehash of your resume. A great cover letter is tailored specifically to the job and the company you are applying to. A standard cover letter follows a 3-paragraph structure. The first paragraph is your introduction. State the position you are applying for and where you saw it advertised. More importantly, express your genuine enthusiasm for the company and the specific role. Show that you've done your research. Mention a recent deal the company worked on, a value that resonates with you, or a specific aspect of their business model that you admire. The second paragraph, the body, is where you make your case. Pick 1 or 2 key experiences from your resume and elaborate on them. Explain how those experiences have prepared you for the specific responsibilities listed in the job description. This is your chance to explicitly connect your skills to their needs. For example, my experience building a 3-statement financial model for a retail company in my corporate finance class has given me the foundational skills required to contribute to your team's valuation projects from day one. The third paragraph is your conclusion. Reiterate your strong interest in the role and the company. State your confidence in your ability to contribute to the team. Finally, include a call to action, indicating your eagerness to discuss your qualifications further in an interview. In summary, your resume and cover letter must work together to present a polished, professional, and compelling picture of who you are and what you can do. Tailor them for every application. Proofread them meticulously. A single typo can signal a lack of attention to detail, a fatal flaw in finance. In our next chapter, we will prepare for the next critical step in the process, the interview. We'll cover how to handle both the behavioral questions that assess your fit and the technical questions that test your knowledge. Thank you for listening. Hello, and welcome back to Unlocking Your Future. You've explored the industry, built your skills, gained some experience, and crafted a perfect resume and cover letter. Now you've secured an interview. This is the final gatekeeper between you and a job offer. The finance interview is famously rigorous, designed to test not only what you know but also how you think and how you handle pressure. In this chapter, we will demystify the interview process by breaking it down into its 2 core components: the behavioral interview and the technical interview. Mastering both is essential for success. Let's start with the behavioral interview. The goal of these questions is to assess your fit. The firm wants to know if you have the soft skills, the work ethic, and the personality to succeed within their team and their corporate culture. These questions often start with phrases like, "Tell me about a time when," or "Give me an example of." They are looking for evidence of your past behavior as a predictor of your future performance. Common behavioral questions explore themes like teamwork, leadership, handling failure, working under pressure, and your reasons for wanting a career in finance. For the why finance question, a generic answer like, "I want to make a lot of money," will not be sufficient. You need a thoughtful narrative that shows a genuine, long-standing interest in the markets, in business strategy, or in helping clients achieve their financial goals. Similarly, for the why our firm question, you must demonstrate that you have done your research. Reference specific deals, the firm's unique culture, or something you learned from speaking with one of their employees. A highly effective way to structure your answers to behavioral questions is to use the STAR method, which we discussed in the context of resumes. It stands for situation, task, action, and result. When asked about a time you worked on a team, first, describe the situation and the task at hand. For example, in my internship, our team was tasked with analyzing a potential acquisition. Next, describe the specific action you took. My role was to build the valuation model and analyze the target company's cash flows. Finally, and most critically, explain the result. My analysis was incorporated into the final presentation for the client, and our team received positive feedback for our thoroughness. This structure ensures your answers are concise, logical, and results-oriented. Now, let's move on to the technical interview. This is where your financial knowledge is put to the test. The difficulty of these questions will vary depending on the role you're interviewing for, but you should be prepared for a wide range of topics. For entry-level roles in investment banking or corporate finance, there are several core areas you must know cold. First is accounting. You need to understand the three main financial statements: the income statement, the balance sheet, and the cash flow statement, and crucially, how they link together. A classic question is, if depreciation, which is a non-cash charge, goes up by $10, how does that affect the three financial statements? You should be able to walk through the changes step by step. Second is valuation. You must understand the primary methods for valuing a company. This typically includes discounted cash flow, or DCF analysis, comparable company analysis, also known as comps, and precedent transaction analysis. You should be able to explain what each method is, how it works, and discuss the pros and cons of each. You don't need to be an expert, but you need to demonstrate a solid conceptual understanding. Beyond these core topics, you may be asked about recent market trends, a recent M&A deal that you've followed, or to pitch a stock. For a stock pitch, you would be expected to briefly describe a company, explain why you think its stock is a good investment, meaning it's undervalued, provide a few key reasons to support your thesis, and mention some of the risks. This tests your ability to think like an investor and to communicate an idea clearly. Preparation is the only way to succeed in a technical interview. There are many excellent interview guides, textbooks, and online courses dedicated to this topic. You should study them thoroughly and practice answering questions out loud, perhaps with a friend or a career advisor. The goal is not just to memorize answers, but to truly understand the underlying concepts so you can apply them to different scenarios. In any interview, technical or behavioral, it's also important to remember that you are interviewing them, too. At the end of the interview, you will almost always be asked if you have any questions for them. Always have 2 or 3 thoughtful questions prepared. Ask about the team culture, the training program, or what a typical day looks like for a junior analyst. This shows your engagement and genuine interest in the role. Ultimately, the finance interview is a performance. It requires diligent preparation, clear communication, and the ability to remain calm under pressure. By understanding the different types of questions and practicing your responses, you can walk into that room with confidence. In our next chapter, we'll take a closer look at the different career paths in more detail, exploring the day-to-day realities of roles like an investment banking analyst versus a wealth management advisor. Thank you for listening. Hello and welcome back to Unlocking Your Future. So far, we've covered the essential steps to get your foot in the door of the finance industry. But once you're inside, what does the work actually look like? A job title on a business card tells you very little about the day-to-day tasks, challenges, and rhythms of a role. In this chapter, we're going to pull back the curtain and explore a day in the life for 3 foundational career paths.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
The investment banking analyst, the corporate finance analyst, and the wealth management advisor. Understanding these distinctions is crucial for finding the path that truly aligns with your skills, personality, and lifestyle goals. First, let's look at the investment banking analyst. This is one of the most well-known and demanding entry-level roles in finance. The primary function of an investment bank is to act as an advisor to corporations on large, complex financial transactions, such as mergers and acquisitions or raising capital by issuing stocks or bonds. The analyst is the junior engine of the deal team. A typical day for an investment banking analyst is long and unpredictable. It often starts early with checking emails and news for any market-moving events that could affect clients. The bulk of the day is spent on analytical and presentation work. This means living in Microsoft Excel and PowerPoint. In Excel, an analyst builds complex financial models to value companies, analyze the impact of a potential merger, or determine a fair price for a new stock offering. In PowerPoint, they create pitch books, detailed presentations used to pitch ideas to clients or to update them on the progress of a deal. This work is incredibly detail-oriented. Analysts are also responsible for conducting industry research, gathering data, and coordinating with lawyers, accountants, and other members of the deal team. The work culture is intense, with late nights and weekend work being the norm rather than the exception. While the learning curve is steep and the hours are grueling, the trade-off is unparalleled exposure to high-stakes transactions and a tremendous acceleration of one's financial skill set. Next, let's shift to the world of the corporate finance analyst. Instead of working at a bank that advises many different companies, a corporate finance analyst works inside one specific company. Say, a technology firm, a manufacturer, or a retail giant. Their focus is singular: managing the financial health and strategy of that one business. The day-to-day life is generally more structured and predictable than in investment banking. An analyst's work often revolves around the company's financial planning and analysis, or FP&A. This involves tasks like budgeting, where they help different departments plan their expenses for the upcoming year. It includes forecasting, where they build models to predict the company's future revenues and profits. A significant part of the job is variance analysis, comparing the company's actual financial results to the budget and forecast, and then explaining why there are differences. Corporate finance analysts also help evaluate strategic decisions. For example, they might analyze the potential return on investment for building a new factory, launching a new product, or acquiring a smaller competitor. The work-life balance is typically much better than in banking, with more regular hours. This path allows you to become a deep expert in a specific industry and see the direct impact of your financial analysis on the success of the business. Finally, let's explore the role of a wealth management advisor, sometimes called a financial advisor. This role is fundamentally different from the previous two because it is primarily client-facing. The main objective is to help individuals and families manage their wealth and achieve their long-term financial goals, such as saving for retirement, paying for a child's education, or planning their estate. A day in the life of an advisor is centered around communication and relationships. A significant portion of the day might be spent in client meetings, either in person or over the phone, discussing their financial situation, reviewing their investment portfolio's performance, and making adjustments to their financial plan. When not meeting with clients, an advisor is busy with market research, staying up to date on economic trends and investment opportunities. They also spend time on portfolio management tasks, executing trades and rebalancing client accounts to align with their stated goals and risk tolerance. A crucial, and often challenging, part of the job is business development, that is, finding and attracting new clients. This requires strong networking and sales skills. The role is highly entrepreneurial and offers a great deal of autonomy. The satisfaction comes from building long-term, trusted relationships and helping people navigate their financial lives. These three roles offer a glimpse into the diversity of the finance world. From the intense deal-driven environment of investment banking, to the strategic operational focus of corporate finance, to the relationship-driven world of wealth management, there is a path for many different types of people. In our next chapter, we will expand our horizons even further by exploring some of the exciting alternative career paths in finance, including private equity, venture capital, and the rapidly growing fintech sector. Thank you for listening. Hello and welcome back. In our last chapter, we explored the day-to-day realities of core finance roles. Now we're going to venture beyond the traditional paths to explore some of the most dynamic, competitive, and innovative sectors in the financial world: private equity, venture capital, and fintech. These fields represent the cutting edge of finance, where massive investments are made, startups are born, and technology is revolutionizing the industry. Understanding these areas will give you a more complete picture of the opportunities available. Let's begin with private equity, often abbreviated as PE. While investment banks advise on deals, private equity firms are the ones buying the companies. A PE firm raises large pools of capital from institutional investors, like pension funds and endowments, and uses that money to acquire established, private companies or take public companies private. Their goal is not just to buy and hold. It is to actively own and improve the company's operations over a period of 3 to 7 years, and then sell it for a significant profit. A junior role in private equity, typically an associate, is one of the most sought-after positions for young finance professionals. The traditional path is to work for 2 to 3 years as an investment banking analyst before making the switch. The work is intensely analytical. A PE professional spends their time sourcing potential deals, conducting incredibly deep due diligence on target companies, and building complex financial models, most notably the leveraged buyout, or LBO model. Unlike in banking, where the focus is on the transaction, PE professionals are deeply involved with their portfolio companies post-acquisition. They work with the company's management team on strategy, operations, and growth initiatives. It's a role that combines deep financial analysis with hands-on business management. Next, let's look at venture capital, or VC. If private equity is about buying established companies, venture capital is about investing in the future. VC firms also raise capital from investors, but they deploy it into early-stage, high-risk, high-potential reward startup companies. They are looking for the next Google, Amazon, or Airbnb. The VC model accepts that most of their investments will not succeed, but they are betting that 1 or 2 massive successes, the home runs, will generate enormous returns and cover all the losses. A career in venture capital is quite different from other areas of finance. While financial analysis is important, the focus is often more qualitative. A VC analyst or associate spends a great deal of time networking within the startup ecosystem, attending demo days to see new companies pitch their ideas, and meeting with founders. They evaluate not just a business plan, but the strength of the founding team, the size of the potential market, and the novelty of the technology or idea. The job involves reading hundreds of business plans, conducting due diligence on promising startups, and once an investment is made, acting as a board member and advisor to help the young company grow. It's a field that requires a passion for innovation, a high tolerance for risk, and the ability to spot talent and great ideas before they become obvious. Finally, we have the booming world of financial technology, or fintech. This isn't a single career path, but rather a vast and rapidly growing industry at the intersection of finance and technology. Fintech companies use software, data, and modern platforms to make financial services more efficient, accessible, and user-friendly. Think of companies that enable digital payments, peer-to-peer lending, robo-advising for investments, or use blockchain technology. Careers in fintech are incredibly diverse and attract people from both finance and technology backgrounds. You don't have to be a software engineer to work in fintech, though technical literacy is a huge plus. There are product manager roles, where you would define the strategy and features of a new financial app. There are data scientist roles, using machine learning to assess credit risk or detect fraud. There are business development roles, forging partnerships with traditional banks. And of course, there are corporate finance roles within the fintech companies themselves, helping to manage the startup's growth and fundraising. The culture in fintech is often more aligned with the tech world, fast-paced, innovative, and more casual than a traditional Wall Street firm. It's an exciting space for those who are passionate about using technology to solve real-world financial problems. These 3 areas, private equity, venture capital, and fintech, represent a shift towards a more operational, technological, and future-focused financial industry. While highly competitive, they offer some of the most challenging and potentially rewarding careers available today. In our next chapter, we'll discuss a skill that is crucial for every single role we've mentioned: developing commercial awareness and staying current with the financial markets. Thank you for listening. Hello, and welcome back to Unlocking Your Future. We have journeyed through various career paths, from investment banking to fintech, and discussed the skills needed to land a role. Now we're going to focus on a skill that transcends any single job title, but is vital for all of them: commercial and market awareness. This is the ability to understand the broader economic and business landscape, and to connect global events to the work you do. It's what separates a good analyst who can build a model from a great one who understands the story the model is telling. So what is market awareness? At its core, it's about understanding the why. Why did the stock market go up today? Why is a certain industry, like renewable energy, attracting so much investment? How might a decision by the Federal Reserve to change interest rates affect your company or your clients? It's a continuous, active process of absorbing information and connecting the dots. This skill is critical for several reasons. In an interview, it demonstrates a genuine passion for the industry. In networking conversations, it allows you to engage in intelligent discussions. And on the job, it informs every piece of analysis you do, making your work more relevant and insightful. Developing this awareness isn't something you can cram for the night before an interview. It's a habit you build over time. Let's break down some actionable steps to cultivate this skill. The first and most important habit is daily news consumption from reputable sources. Make it a part of your morning routine to spend 15 to 30 minutes reading the news. Your goal is to get a high-level overview of what's happening. Key publications that are staples in the industry include the Wall Street Journal, Bloomberg, the Financial Times, and Reuters. You don't need to read every article. Start with the main headlines, the market summary section, and then choose 1 or 2 articles that seem interesting or relevant to the field you want to enter. The key is consistency. A little bit every day is far more effective than a lot once a week. Second, you need to become familiar with a few key economic indicators. These are data points that act as a health check for the economy. You don't need a PhD in economics, but you should understand the basics. For example, you should know what gross domestic product, or GDP, represents. It's the total value of all goods and services produced by a country, and its growth rate tells us how fast the economy is expanding or contracting. Another is the Consumer Price Index, or CPI, which is a key measure of inflation. Understanding inflation is crucial because it affects everything from consumer purchasing power to central bank policy. Finally, the unemployment rate gives you a sense of the health of the labor market. Knowing what these terms mean will allow you to understand financial news on a much deeper level. Third, get into the habit of following the financial markets. At a minimum, you should be aware of the general performance of the major stock indices in the US, which are the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite. These indices serve as a benchmark for the overall health and sentiment of the market. You might also want to follow the price of key commodities like oil, or the exchange rate between the US dollar and other major currencies. This doesn't mean you need to be an active trader. The goal is simply to develop an intuitive feel for market movements, and to ask yourself what might be causing them. Finally, you can broaden your perspective beyond traditional news sources. There are many excellent financial podcasts that break down complex topics in an engaging way. Shows like NPR's Planet Money or Bloomberg's Odd Lots are great examples. You can also subscribe to industry-specific newsletters. If you're interested in venture capital, for instance, a newsletter like Term Sheet can provide daily insights. Following respected economists, journalists, and industry leaders on professional social media platforms can also provide real-time commentary and diverse perspectives. Building market awareness is a marathon, not a sprint. Start small. Pick one news source to read daily. Look up one economic term you don't understand. The goal is to build a framework in your mind that allows you to place new information into context. Over time, you'll find that you can not only follow the conversation, but also contribute to it with your own informed opinions. In our next chapter, we will discuss how to take all these skills and build a long-term career strategy, including the invaluable role of mentorship. Thank you for listening. Hello, and welcome back to Unlocking Your Future. We've spent a significant amount of time focused on the crucial first step, landing a job in the finance industry. But getting the job is not the finish line, it's the starting line. A successful and fulfilling career is a marathon that requires foresight, strategy, and guidance. In this chapter, we're going to shift our focus to the long game. We'll discuss how to think strategically about your career progression, and explore one of the most powerful assets you can have on your journey: a mentor. First, let's talk about building a career strategy. It's easy to get caught up in the immediate demands of your first role, but it's important to periodically lift your head up and think about where you're going. A career strategy is not a rigid, unchangeable plan. Rather, it's a flexible roadmap that helps you make intentional decisions. A helpful exercise is to think in terms of a 2, 5, and 10-year horizon. What skills do you want to develop in the next 2 years? What kind of role or level of responsibility would you like to have in 5 years? What is your ultimate long-term career ambition in a decade? Answering these questions helps you identify the gaps between where you are and where you want to be, allowing you to proactively seek out projects, roles, and learning opportunities to close those gaps. A core component of any long-term strategy in finance is a commitment to continuous learning. The financial markets, technologies, and regulations are in a constant state of evolution. The skills that make you valuable today may not be enough tomorrow. This means actively looking for ways to grow. It could involve pursuing advanced professional certifications, like the Chartered Financial Analyst, CFA, or Certified Public Accountant, CPA designations, to deepen your expertise. It might mean learning a new technical skill, like the Python programming language for data analysis, which is becoming increasingly valuable across all areas of finance. It also includes developing your soft skills, things like negotiation, public speaking, and leadership, which become more critical as you advance into management roles. It's also important to recognize that career paths are rarely a straight line. Your strategy should be adaptable. You might start in investment banking, discover a passion for a specific industry, and then pivot to a corporate finance role within that industry. Or you might work in asset management, and then decide to join a fintech startup that is disrupting the field. Being open to these pivots is not a sign of a failed plan. It's a sign of a smart and evolving strategy that adapts to new opportunities and your own changing interests. Now let's discuss the second critical element of a long-term career: mentorship. No one achieves success alone. A mentor is an experienced and trusted advisor, someone who has walked the path before you and can offer guidance, perspective, and support. This is different from a boss who manages your work, and different from a sponsor who actively advocates for your promotion. A mentor is a sounding board, a source of wisdom, and a guide. So how do you find a mentor? The best mentorships often develop organically. Look for senior colleagues, either on your direct team or in other parts of the organization, whose career you admire and with whom you have a natural rapport. Your university's alumni network is another fantastic resource. You can reach out to alumni for an informational interview, and if a good connection is made, that could evolve into a mentorship over time. The key is not to formally ask, "Will you be my mentor?" in the first conversation. Instead, focus on building a genuine professional relationship. Once you have a mentor, it's your responsibility to be a good mentee. This is crucial. Always be respectful of your mentor's time. Come to your conversations prepared with specific questions or challenges you're facing. Don't just ask for answers. Discuss your own thoughts and potential solutions first. Keep your mentor updated on your progress and the outcomes of the advice you've taken. And most importantly, be open to constructive feedback. A good mentor will tell you what you need to hear, not just what you want to hear. In summary, building a successful career in finance requires you to be the CEO of your own career. This means having a proactive strategy, committing to lifelong learning, and building a network of trusted mentors to guide you along the way. By thinking strategically and seeking guidance, you can navigate the complexities of the industry and build a career that is not only successful, but also sustainable and rewarding. In our next chapter, we will delve into the day-to-day realities of the workplace, discussing how to navigate the unique culture of finance, the importance of ethics, and the ongoing challenge of work-life balance. Thank you for listening. Hello, and welcome back to Unlocking Your Future. Thus far, we've focused on the technical skills and strategic steps required to enter and advance in the finance industry. However, long-term success isn't just about what's on your resume. It's about how you conduct yourself as a professional. The world of finance has a distinct culture, a rigid ethical code, and significant demands on your time. In this chapter, we will navigate these crucial topics: the unwritten rules of professionalism, the non-negotiable role of ethics, and the real-world challenge of achieving work-life balance. Let's begin with professionalism and culture. Finance, particularly in client-facing and institutional roles, operates on a high standard of professional conduct. This goes beyond just dressing appropriately. It's about embodying reliability and competence. Punctuality is paramount, being on time is expected, and being early is better. Communication is expected to be clear, concise, and direct. Whether writing an email or speaking in a meeting, the ability to convey complex information efficiently is highly valued. The culture is intensely results-oriented. Your work product, the accuracy of your models, the clarity of your presentations, and the thoroughness of your research is a direct reflection of your capability. Many traditional finance firms have a hierarchical structure. As an analyst or associate, you are part of a team, and it's important to understand your role and respect the experience of your superiors. A key part of the early years in finance involves paying your dues, handling the more foundational tasks with a positive attitude, and demonstrating that you are a reliable team player. This builds the trust that is necessary to be given more responsibility over time. Next, we must discuss what is arguably the most important topic of all: ethics. The entire global financial system is built on a foundation of trust. Clients trust firms with their money, and companies trust them with confidential information. A single ethical lapse can shatter that trust, ending a career, and causing irreparable damage to a firm's reputation. There is zero tolerance for unethical behavior. Two core ethical principles you must understand are confidentiality and conflict of interest. As a finance professional, you will be privy to highly sensitive, non-public information about your client's finances, or about a potential merger your firm is advising on. Maintaining the strictest confidentiality is a legal and ethical obligation. A conflict of interest arises in a situation where your personal interests could potentially interfere with your professional duties. For example, using confidential information about an upcoming deal to make a personal trade would be a massive ethical and legal breach. Firms have extensive compliance departments and strict codes of conduct to help employees navigate these issues, and your duty is to understand and adhere to them without exception. A useful guideline many professionals use is the front page test. Before making a decision, ask yourself how you would feel if that decision and your reasoning were printed on the front page of a major newspaper. If you would be uncomfortable, you should reconsider your course of action. Finally, let's address the real-world challenge of work-life balance. It's no secret that certain areas of finance, especially investment banking and private equity, are known for their demanding hours. The pressure to perform is high, and the work can be all-consuming, particularly in the first few years of your career. Ignoring this reality can lead to stress and burnout. Managing this challenge is a skill in itself. One of the most important strategies is to become ruthlessly efficient with your time. Learning to prioritize tasks, minimize distractions, and work effectively under pressure can help you get more done in less time. When you are not working, it's crucial to protect that time to disconnect and recharge. Whether it's through exercise, hobbies, or spending time with friends and family, having outlets outside of work is essential for long-term sustainability. Building a strong support system of peers, mentors, and family who understand the demands of your career can also make a significant difference. It's important to remember that a career is a marathon, not a sprint, and taking care of your own well-being is a critical component of long-term success. In summary, thriving in finance requires more than just financial acumen. It requires a deep commitment to professionalism, an unwavering ethical compass, and a proactive approach to managing the demanding nature of the work. In our next chapter, we will explore the important topic of diversity and inclusion in the finance industry, discussing industry-wide initiatives and opportunities. Thank you for listening. Hello, and welcome back to Unlocking Your Future. For much of its history, the finance industry in the United States was perceived as a monolithic, homogeneous field. However, in recent years, there has been a significant and accelerating push toward creating a more diverse and inclusive environment. In this chapter, we will explore the landscape of diversity and inclusion, or D&I, in finance. We'll discuss why it has become a business imperative and highlight some of the resources and opportunities available to women, minorities, and individuals from all underrepresented backgrounds. First, it's important to understand why financial firms are now so focused on D&I. This shift is driven by more than just social responsibility. It is rooted in a strong business case. A growing body of research suggests that diverse teams make better decisions. When people with different backgrounds, experiences, and perspectives come together to solve a problem, they tend to challenge assumptions, reduce groupthink, and approach risk from multiple angles. This diversity of thought is incredibly valuable in an industry where complex decision-making is constant. Furthermore, a workforce that reflects the diversity of its client base is better equipped to understand and serve the needs of those clients. In a globalized world, a firm that embraces diversity is simply a more competitive and resilient firm. In response to this, the industry has launched numerous initiatives aimed at attracting, retaining, and promoting a more diverse talent pool. One of the most visible efforts is the establishment of employee affinity groups or networks. These are firm-sponsored groups for employees who share a common background or identity, such as Women in Finance networks, networks for Black or Hispanic and Latino professionals, LGBTQ+ Pride networks, and groups for veterans. These groups provide a powerful sense of community, facilitate mentorship, and offer professional development opportunities. Beyond internal networks, many firms have developed partnerships with external organizations dedicated to creating a pipeline of diverse talent. Organizations like the Toigo Foundation, Sponsors for Educational Opportunity, SEO, Career and Management Leadership for Tomorrow, MLT, provide invaluable training, mentorship, and career opportunities for minority professionals entering finance and business. Similarly, groups like Girls Who Invest and 100 Women in Finance are focused on increasing the number of women in investment management roles. These organizations offer everything from intensive summer training programs for college students to ongoing support for seasoned professionals. Many major financial institutions have also created their own diversity-focused recruitment programs. These can take the form of early insight programs for college freshmen and sophomores, specialized internship tracks, or scholarships aimed at students from underrepresented backgrounds. When you are researching firms, it is worth looking specifically for these types of programs on their career websites. So, as a candidate, how can you gauge a firm's genuine commitment to diversity and inclusion? First, do your research. Many companies now publish annual D&I reports that provide data on the demographic makeup of their workforce and leadership. Look at the company's leadership page. Does the senior management team reflect diversity? During the interview process, you can ask thoughtful questions. For instance, you might ask the interviewer about their personal experience with the firm's culture, or inquire about the role and visibility of the company's affinity groups. The answers to these questions can provide valuable insight into whether a company is truly living its stated values. While the finance industry still has significant work to do to achieve full representation at all levels, the momentum is undeniable. The doors of opportunity are wider open than they have ever been. The industry is actively seeking out talented and ambitious individuals from every background, recognizing that its future success depends on their contributions. In our next chapter, we will look to that future, exploring the major trends that are reshaping the financial landscape, including the rise of artificial intelligence, the importance of ESG investing, and other key innovations. Thank you for listening. Hello, and welcome back to Unlocking Your Future. We've explored the paths to enter finance and the strategies to build a career, but the industry you enter today will not be the same industry in 5 or 10 years. The only constant in finance is change, and right now, that change is happening at an unprecedented pace. In this chapter, we will look over the horizon at 3 powerful trends that are fundamentally reshaping the financial landscape: artificial intelligence, ESG investing, and the broader digital transformation of the industry. Understanding these forces is critical for staying relevant and succeeding in the decades to come. First, let's talk about artificial intelligence and machine learning, often simply called AI. AI is moving far beyond simple automation. In finance, it is being deployed to analyze vast datasets in real time, identify patterns invisible to the human eye, and make predictions with increasing accuracy. For example, in the world of trading, AI-powered algorithms can execute millions of trades in milliseconds. Banks are using machine learning to detect fraudulent transactions with incredible speed and to make more sophisticated credit scoring decisions. The wealth management industry is being transformed by robo-advisors, which use algorithms to create and manage personalized investment portfolios. For an aspiring professional, the rise of AI does not mean that humans will be replaced. Instead, it signals a shift in the skills that are most valued. The future of finance will require professionals who can work alongside AI. The focus will shift from manual data collection and basic analysis to higher-level tasks. Interpreting the insights that AI provides, making strategic decisions based on that data, managing the complex systems, and crucially, handling the client relationships and ethical considerations that machines cannot. The second major trend is the rise of ESG investing. ESG stands for environmental, social, and governance. It's a framework used to evaluate companies on a set of non-financial criteria. The environmental component looks at a company's impact on the planet, such as its carbon emissions or water usage. The social component examines how a company manages relationships with its employees, suppliers, customers, and the communities where it operates. And the governance component deals with a company's leadership, executive pay, audits, and shareholder rights. What was once a niche area of the market has moved firmly into the mainstream. A growing number of investors, from large pension funds to individual savers, are demanding that their investments align with their values. This has created a huge demand for financial professionals who understand this framework. New roles are emerging, such as ESG analysts who research and rate companies on their sustainability performance, and portfolio managers who specialize in building ESG-focused investment strategies. This trend reflects a broader shift in the purpose of finance, from a sole focus on financial returns to a more holistic view of a company's overall impact. The third transformative force is the broader digitalization of finance, which includes technologies like blockchain. At its core, a blockchain is a secure and transparent digital ledger. This technology has the potential to make many financial processes faster, cheaper, and more secure by removing intermediaries. For example, it could revolutionize cross-border payments, which are often slow and expensive, or streamline the complex process of trade finance. This trend also includes the emergence of digital assets. While a complex and evolving area, the underlying technology is being explored by major financial institutions for its potential to create more efficient and accessible markets. These 3 trends, AI, ESG, and digitalization, are not separate, they are interconnected. AI is used to analyze ESG data, and blockchain technology can be used to transparently track a company's supply chain for sustainability purposes.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
For anyone starting their career today, the key takeaway is the importance of adaptability and lifelong learning. The future belongs to those who are curious, technologically literate, and able to connect their financial expertise with these powerful emerging trends. In our next chapter, we'll bring our focus back to the immediate present and offer a practical guide for your first 90 days on the job, ensuring you start your new role with confidence and momentum. Thank you for listening. Hello, and welcome back to Unlocking Your Future. After all the research, networking, and interviewing, you finally landed the job. Congratulations. This is a huge achievement. But as we've said before, this is a starting line, not a finish line. The first 3 months, or 90 days, in a new role are a critical period that can set the tone for your entire tenure at a firm. This is your chance to make a great first impression, build a reputation for competence and reliability, and lay a strong foundation for future success. In this chapter, we'll break down the first 90 days into a simple framework to help you navigate this period with confidence. Let's divide this period into 3 30-day phases. Phase 1. The first 30 days is all about learning and observation. Your primary goal is to be a sponge. Absorb as much information as you possibly can about the company, your team, and your specific role. This is the time to listen more than you speak. Focus on understanding the unwritten rules of the company culture. How do people communicate? Is it through formal emails or quick instant messages? What is the general pace of work? During this first month, concentrate on mastering the foundational tasks you are given. Whether it's formatting a spreadsheet, gathering data, or proofreading a presentation, execute these tasks flawlessly. Your attention to detail will be noticed immediately. Double-check your work, and then check it again. This builds a reputation for reliability. Schedule a meeting with your direct manager within the first week to clarify their expectations for you in this role. Ask questions like, what would a successful first month look like from your perspective? And what are the key priorities for the team right now? This shows initiative and ensures you are aligned with their goals from day one. Phase 2. The next 30 days, from day 31 to 60, is about contributing and connecting. Now that you have a basic understanding of your role and the team's dynamics, you can begin to transition from a passive learner to a more active contributor. You should continue to execute your core responsibilities perfectly, but now you can start looking for small ways to add value. For instance, if you notice a repetitive task that could be made more efficient with a simple spreadsheet macro, you might, after checking with a colleague or your manager, offer to build it. This is also the time to begin expanding your network within the firm. Your goal is to understand how your team's work fits into the larger organization. A great way to do this is by setting up brief, 15-minute coffee chats with colleagues from your team, and even from adjacent departments. Ask them about their roles, their career paths, and how your teams work together. This not only builds valuable relationships, but also gives you a much broader context for your own work, which will make you more effective. Your questions in team meetings can now become more thoughtful, showing that you are connecting ideas and thinking about the bigger picture. Phase 3. The final 30 days, from day 61 to 90, is focused on initiating and integrating. By this point, you should be operating with more autonomy and have a solid grasp of your responsibilities. You've built a reputation for being reliable and are starting to be seen as a fully integrated member of the team. Now is the time to demonstrate proactive thinking. Based on what you've learned, you might identify a small area for improvement or a minor problem that you can take the lead on solving. Always with your manager's approval, of course. This doesn't need to be a massive project. It just needs to show that you are taking ownership and thinking like a long-term member of the team. Towards the end of this 90-day period, it is a very good idea to schedule another check-in with your manager. Use this meeting to briefly summarize what you've accomplished and learned, and to proactively ask for feedback on your performance. Ask questions like, what am I doing well that I should continue? And are there any areas where you think I could improve? This shows maturity, a commitment to professional growth, and allows you to make any necessary course corrections early on. By following this simple 30-60-90-day framework, learn, contribute, and initiate, You can navigate the start of your new role strategically, making a positive impression and setting yourself up for long-term success. In our next chapter, we'll look beyond the initial job and discuss the next steps in your educational journey, focusing on advanced degrees and professional certifications. Thank you for listening. Hello, and welcome back to Unlocking Your Future. Throughout this series, we've focused on the foundational steps to launch your career in finance. But in an industry that values expertise, continuous learning is the key to long-term advancement. Your undergraduate degree is the price of admission, but advanced degrees and professional certifications can be powerful accelerators for your career. In this chapter, we will explore some of the most respected credentials in finance, discussing what they are, who they are for, and how they can shape your professional journey. First, let's discuss advanced degrees. The most well-known is the Master of Business Administration, or MBA. An MBA from a top-tier business school has long been a traditional path for career progression in finance. It provides a broad education in all aspects of business, from marketing and operations to strategy and finance. An MBA is often pursued after gaining several years of work experience. For many, it serves as a career pivot, a way to switch from one industry into finance, or to move from a technical role into a management position. Within finance, an MBA is often a prerequisite for advancing to the associate level in investment banking or private equity. Beyond the curriculum, the greatest value of a top MBA program is often the powerful alumni network and the on-campus recruiting opportunities it provides. For those seeking a more specialized, quantitative-focused education, a Master of Finance, MPhil, or a Master of Science in Financial Engineering, MSFE, can be an excellent alternative. These programs are typically 1 year long and dive deep into financial theory, econometrics, and quantitative modeling. They are ideal for individuals who want to pursue highly analytical roles in areas like asset management, risk management, or sales and trading. Now, let's turn to professional certifications. These are credentials earned by passing a series of rigorous exams and, in some cases, meeting certain work experience requirements. They are a powerful signal to employers that you have a verified, in-depth knowledge of a specific domain. Perhaps the most globally respected designation in the investment world is the Chartered Financial Analyst, CFA Charter. The CFA program is a graduate-level, self-study program that covers a broad range of topics, including investment tools, asset valuation, portfolio management, and wealth management, with a strong emphasis on ethics. Earning the charter requires passing 3 challenging 6-hour exams. It is considered the gold standard for professionals in investment management, equity research, and asset allocation. The CFA Charter demonstrates a deep commitment to the profession and a mastery of investment analysis. For those on the accounting and corporate finance track, the Certified Public Accountant (CPA) license is the key credential. While often associated with careers in public accounting and auditing, the CPA is also highly valued in corporate finance, forensic accounting, and risk management. Earning the CPA license involves passing a 4-part exam and meeting state-specific education and experience requirements. It signifies a high level of competence in accounting, reporting, and business law. If your interests lie in helping individuals with their personal financial goals, the Certified Financial Planner (CFP) certification is the industry benchmark. The CFP program focuses on a holistic approach to financial planning, covering topics like retirement planning, insurance, estate planning, and investment strategies for individuals and families. The certification process includes coursework, a comprehensive exam, work experience, and adherence to a strict code of ethics. It is essential for building a career based on trust and credibility in the wealth management and financial advisory space. Finally, it's important to understand FINRA licensing. FINRA, the Financial Industry Regulatory Authority, is a self-regulatory organization that oversees brokerage firms in the United States. To sell securities products, professionals must pass specific licensing exams. The most common of these is the Series 7 exam. Unlike the certifications we've discussed, you cannot simply decide to take these exams on your own. You must be sponsored by an employing financial firm. Typically, a firm will hire you for a role and then sponsor and provide training for you to pass the required exams as a condition of your employment. Choosing whether to pursue an advanced degree or a certification is a significant decision. It depends entirely on your specific career goals, your current experience level, and the path you wish to follow. These credentials are not just lines on a resume. They represent a significant investment of time, effort, and resources, demonstrating your dedication to mastering the art and science of finance. In our final chapter, we will bring everything together, summarizing the key steps to starting your career and offering some concluding thoughts for your journey ahead. Thank you for listening. Hello, and for the final time, welcome back to Unlocking Your Future. We have reached the end of our journey together. Over the past 14 chapters, we have navigated the vast and complex world of the United States finance industry. Our goal was to provide you with a clear and actionable roadmap, and to demystify the process of starting a career in this dynamic field. In this concluding chapter, we will bring everything together by revisiting the key pillars of our discussion, and we'll leave you with some final thoughts as you prepare to take your next steps. Our journey began with exploration. We started by mapping the industry, breaking it down from the daily services of commercial banking to the high-stakes deal-making of investment banking, from the strategic world of corporate finance to the client-focused relationships of wealth management. The most important takeaway from this exploration is that finance is not one single thing. The first and most critical step in your journey is self-reflection. Understanding your own interests, strengths, and personality to find the corner of the industry where you can truly thrive. From there, we built your foundation. We discussed the essential toolkit every aspiring professional needs. This includes the hard skills, the quantitative and analytical abilities, the mastery of Excel, and the understanding of financial modeling. But we also highlighted the indispensable soft skills, clear communication, attention to detail, and the ability to work effectively in a team. We emphasized that a strong educational background provides the theoretical knowledge, but a commitment to continuous learning is what sustains a career. With a foundation in place, we moved to action. We stressed that in a competitive field, knowledge alone is not enough. You must prove your capabilities and build your connections. We explored how internships serve as the bridge from the academic to the professional world, providing invaluable real-world experience. We demystified networking, reframing it from an intimidating task to the simple, genuine act of building professional relationships through tools like informational interviews and leveraging your alumni network. Next, we focused on execution. We walked through the process of crafting your narrative with a tailored, quantified resume and a compelling cover letter. We then prepared you for the rigors of the finance interview, breaking it down into its behavioral and technical components, ensuring you could demonstrate both your cultural fit and your financial acumen under pressure. Finally, we adopted a long-term perspective. We discussed the importance of having a career strategy, the power of finding mentors, and the non-negotiable bedrock of professionalism and ethics. We looked at the demanding real-world culture of finance and the importance of proactively managing your well-being. We explored the exciting future of the industry, from AI and ESG to the broader digital transformation, highlighting the need for adaptability. And we covered the ways that advanced degrees and certifications like the CFA Charter can serve as powerful career accelerators. As we conclude, it is important to acknowledge that the path to a career in finance is challenging. It requires dedication, resilience, and a tremendous amount of hard work. There will be moments of doubt and difficulty, but it is also a path that is more accessible than ever before to talented and driven individuals from all backgrounds. The key is to approach it as a marathon, not a sprint. Be curious. Read the news every day. Be proactive. Reach out for that informational interview. Be persistent. A rejection is not a reflection of your worth, but simply a part of the process. Above all, act with integrity in everything you do. You now have the map. You understand the terrain, you know what tools you need, and you have a strategy for the journey. The rest is up to you. The world of finance plays a critical role in shaping our economy and society, and it is filled with opportunities to build a rewarding and impactful career. Your journey is just beginning. Thank you for listening, and we wish you the very best of luck.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.